So guys, I hope you had a good trading session today. For us also it was okay, it was good. So today this is the overall summary of the profit and loss. We are 1 lakh rupee profit overall, little above 1 lakh. Nifty contributed about 21,000. Majority of the profits came from Bank Nifty, which is basically our algo trading. Right. So as I have been talking about this, that we are using this month to solidify our processes, our order placement and everything else. And things seem to be on track, although we are facing some issues once in a while, but more or less things to be falling in line. So I'm hoping that things will get better from January onwards. So now today I want to talk about one very simple thing, and there are other things that we're going to talk about, but I thought if I have to keep this brief, there is one point that I want to communicate. And the point pertains to backtesting, right? So we have spent a lot of time backtesting. We have developed different types of tools for backtesting, right? So for example, right here, we have developed a tool where we can visually analyze the results. We can visually see how the profits and loss would have fluctuated over a day or maybe a week or a month for intraday trading or swing trading, right? So there are different ways of analyzing your backtested data. At the same time, we are also looking at the hard data, right? So we run backtest and then we get the files and then we look at the numbers. So there is plenty of work that is going on, but there is something very simple that I want to communicate, right? After all said and done, right? Today was I want to take an example of today. So today was what we call as a trend day, right? So the market started at one end and finished at the other end. Right? So this is what is called as a trend day. From the get-go, the market participants had a clear intention that they wanted to sell. Right? Now, if you're a discretionary trader and you had a bullish bias, you wanted to buy and then that did not work out, that I can understand. That is quite normal. But if you are testing a strategy and you are using a systematic way of trading, then a day like this should not give you a loss. Right? Now, why is that? Well, when I look at the backtested results for any strategy, I look for what factors would surprise me, right? So, for example, like right away, I'm testing some strategy here, and I'm just looking at for November. So 3rd of November, well, this is a little interesting. There was a spike here. I don't know whether it was a data issue or something else. Right. So, but apart from this one spike seems like a very ordinary kind of a day and you make some profit. It makes sense. Right. So that is something which I will take away and I will not have any worries apart from this one spike. Second thing, then I look at this day, and then this day will definitely surprise me a little bit because at one point there was a profit of 2.5 lakh rupees, then it went down to 1 lakh, then again went to 3 lakh, and then again came down to 0, right? It became 0. So that would be surprising. So then I will look at, okay, what kind of a day was it, right? What happened that caused this profit to disappear? And then, I mean, it seems like, the market broke out of the day's high and that probably caused it, but still very suspicious, right? Losing everything in basically a few minutes is very suspicious. So similarly, when you look at whenever you look at your backtested data, you should know what is the strength of your strategy and what is its weakness. Right? So if on a simple trend day like this, very simple trend day, not a single call option stop loss would have gotten hit except maybe probably in the morning. Everything else, all the call options basically made you money. Only the put options would have caused you trouble. So the point that I am trying to make here is that in a simple day, which is a simple trend day where there is no volatility, there is simply a trend. If your strategy is not making money, then basically it's a weakness of the strategy, right? It's not necessarily bad. Maybe your strategy works well on a volatile day, maybe on a trend day it may not do well. That is fine. But as long as you are aware that, yeah, this is the fault on my strategy, that if the day happens to be a trend day, then I will not make money. That is fine, because the trend day is not going to be like more than 20-30% in a year. Right. So it's actually good that if your strategy is more suitable for volatile days and less suitable for trend days, but you should know. The thing that bothers me a little bit is that when people see a day like this and they say that, okay, market came down, so I incurred a loss. That doesn't make sense to me. Market can easily come down. Market can easily go up. It's not a question of what the market does, right? It's a question of how your strategy adapts to the market conditions. And if it's not adapting, if it's a static strategy, it just basically just blindly selling call options or blindly selling put options and all that, then of course you're going to incur a loss, right? A trend day will cause problems. So that is my quick takeaway from this video, that whenever you are back testing, look at plenty of days, plenty of cases, and see in which specific scenario is your strategy not working, and in which specific scenario will it work. And then when you apply that in real life, make sure to double check that what you saw in back testing, is it what you're getting in real life as well, right? So that is one way to approach back testing. I hope this will give you guys some thought process of how to handle back testing. Okay. So apart from that, life is good. The couple of weeks in the December, it's going to be low volume in the market, so just be cautious. All right. So with that, I'm just going to wrap this thing up, and I will see you guys next week.